Welcome to This Explainer. Okay, so we're going to dive right into what is honestly one of the most frustrating, persistent mysteries of modern life. Have you ever wondered why the rich just seem to keep getting richer, while millions of incredibly hardworking people are out there struggling day in and day out just to get ahead? I mean, you see it everywhere. People are putting in 50, maybe 60 hours a week, completely exhausting themselves, and yet they're barely moving the needle on their bank accounts. Meanwhile, others just seem to effortlessly accumulate more and more wealth. It's a paradox, and honestly, it drives so many of us crazy.
So, let's start with section 1, the wealth illusion, working hard versus getting ahead. We were all pretty much raised on this idea, right? The idea that if you just put your nose to the grindstone and put in the hours, financial freedom is just going to naturally follow as your reward. But as a lot of us know, there is a massive and frankly often painful gap between our daily physical or mental effort and our actual financial reality. So is the wealth gap simply because they work harder? Well, it's human nature to think that if someone has 10 times the money, they must surely be working 10 times as hard. But logically, we know that's physically impossible. You only have 24 hours in a day. The person serving coffee, working on a construction site, or pulling double shifts is often working incredibly hard, physically exhausting themselves, and yet they aren't the ones stockpiling enormous wealth. Clearly, effort alone does not equal wealth.
Which naturally brings us to the next question. Are they simply luckier? And sure, some people inherit wealth or, win the lottery. Luck always plays a tiny, unpredictable role in life. But when you look at self-made individuals who consistently build wealth over decades, luck just isn't a repeatable strategy. There's a much deeper mechanism at play here. They understand something fundamental about money that, let's face it, most of us are just never formally taught. That brings us to section 2, the ultimate mindset shift, or the tale of two earners. The absolute crucial point we're going to explore in this explainer is that the biggest difference in wealth accumulation often isn't the size of your paycheck at all. It's actually the way you think about that paycheck. It's a complete psychological pivot. On one side, we have the default setting, working for money. You trade your time for a paycheck, and the second you stop working, well, the money stops flowing completely. But on the other side, that's the true wealth mindset, building assets that work for you. The wealthy view their money as a tool. It's kind of like having a bunch of little employees whose sole job is to go out and earn you more money. This one single mindset shift, from trading time for dollars to acquiring assets that generate value on their own, can completely alter your entire financial trajectory.
Let's make this super tangible. Imagine two people, and they are earning the exact same salary. Over on the left, we've got the spender. They get a raise, and immediately they upgrade their lifestyle. They buy the latest gadgets, expensive clothes, a much bigger car with a hefty monthly payment. Now over on the right, we have the investor. They earn the exact same amount, but they invest a portion of every single paycheck. They spend their money on learning new skills, and they buy assets. Fast forward 5 years down the road. Their incomes, they might still be absolutely identical, but their net worth, they could be worlds apart. And honestly, it is incredibly frustrating to realize that you could be making great money, but still falling behind simply because your habits look a little too much like the spender.
All right, section 3, 5 habits of wealth and why the rich keep growing. So how do we systematically bridge that gap? Well, we start by looking at the specific actionable behaviors that separate the wealthy from everyone else. And that kicks off with habit number 1, acquiring assets. Just to cut right through the financial jargon here, an asset is simply something that has the potential to produce value or grow over time. Think investments, stocks, real estate, or building a business. It sounds incredibly simple, right? But its application is huge. So many people buy things that lose value the literal second they purchase them. The wealthy, though, they obsessively focus their resources on acquiring assets. They want things that have the potential to just quietly increase their wealth in the background. Which leads us straight into habit 2, understanding compound growth. Now, what's really interesting about compound growth is that it is notoriously unexciting in the short term. Building wealth is rarely this flashy, overnight phenomenon. When you first start investing, the growth looks completely microscopic. You might make a few dollars in interest, and it feels like you are getting absolutely nowhere. But consider this. If you were to fold a standard piece of paper in half 42 times, it would literally be thick enough to reach the moon. I know, it sounds crazy, but that is the mind-bending math of compounding. Patience and time are the secret ingredients here. And when you map this out, you see exactly why that patience pays off so big. From early savings to midterm growth, all the way up to long-term extraordinary wealth, you witness how small, consistent progress scales exponentially over years and decades. The interest you earn actually starts earning its own interest. That is compounding at work. The crucial takeaway here is time. The earlier you start saving and investing,
the more time your money has to potentially multiply. It transforms from a linear, kind of boring savings plan into a powerful wealth-generating engine. Moving right along, we have habit 3, continuous learning. Successful people rarely, if ever, stop learning once they finish their formal schooling. They treat knowledge as one of their absolute most valuable investments. They're constantly reading books, studying financial markets, picking up new skills, and adapting when the world inevitably changes. Because when the economy shifts, they don't get left behind. They've already invested the time to understand the new landscape.
Now, habit 4 is where a lot of everyday investors stumble. It's emotion versus discipline. Emotion is driven by fear and greed, and frankly, these two emotions can destroy wealth faster than a market crash. When the stock market falls, a lot of people panic and sell at a loss out of sheer fear. When prices rise quickly, they chase trends out of greed. But long-term investors usually take the exact opposite approach. They focus on strict discipline. They don't panic during market drops because they maintain a long-term focus, actively choosing to ignore the daily noise.
And that brings us to the 5th and final habit, delayed gratification. Look, most of us are hardwired to want our rewards right now. Buy the item today, experience the thrill today. But true wealth often comes from being entirely willing to sacrifice today for much greater opportunities tomorrow. Skipping that unnecessary spending today isn't about some miserable deprivation. It's about buying yourself massive choices and absolute freedom for your future.
Okay, section 4, your wealth-building blueprint. Actionable steps for today.
It's one thing to understand the mindset of the wealthy, but how do we actually put it into practice? Well, here is your blueprint to implement immediately. First, you have got to track exactly where your money goes, because you simply can't manage what you don't measure. Next, build an emergency fund so you have actual financial armor against life's unexpected curveballs. Then, ruthlessly avoid unnecessary debt. Just stop paying interest on things that are actively losing value. From there, make sure you keep learning to continuously upgrade your own knowledge base. And finally, invest consistently, aligning with your own personal goals and risk tolerance. If you put these 5 steps into motion, you immediately stop acting like a mere wage earner and you start behaving like a true investor.
Ultimately, this whole concept is summarized beautifully by this rule of thumb. Becoming wealthy isn't about one lucky decision. It's about hundreds of smart decisions repeated over time. I absolutely love this because it removes the incredible pressure of needing to be some financial genius or needing to hit the jackpot. It serves as a reminder that your future is being actively, continually shaped by the tiny, seemingly insignificant financial habits that you practice today.
So, I want to leave you with this provocative question to really chew on. Will your habits make you wealthier 5 years from now or keep you exactly where you are today? Look closely at your daily routines and your spending. Are they building assets or are they draining your resources? The ultimate responsibility and the ultimate power is entirely in your hands. Thank you so much for joining me for this explainer, and I genuinely hope this sparks a desire to keep building your financial education and take full control of your future.